And so, hi, we're here with a friend of the podcast, Chris Tarry. Chris has been on the podcast before, but we've invited him back to talk about the aviation market right now and what we're going to see in 2021. For those of you who don't know Chris has got over 35 years experience in the aviation industry, and what he doesn't know about aviation isn't really worth knowing. He's worked in the City of London, and then in 2002, he set up his own independent consultancy firm and has been advising all around the world since then. Chris, hi, how are you?
Very well indeed, Andrew, and thank you very much for that invitation. I fear there's only one way from now, and that may be down for me, but looking forward to our discussion. And, you know, at the end of the day, we probably not got any right answers, but if we give people different ways of thinking about things or looking at things, then hopefully we might have sort of added a bit to the thinking and, you know, what remains a difficult and challenging time for most.
Well, let's get straight into it. We're going to look at three different topics today. We're going to look at the global restart, so some of the key trends that we've seen. We're going to look at what's constraining the market and why the market isn't coming back. And then we're also going to take quite an in-depth look at the aviation market in 2021. The truth is nobody really knows, but there are some, we can start to see some sort of trends, and we're going to talk about those in more detail. But let's get straight into the key trends that we're seeing so far. So, Chris, we're seeing a number of curves coming out of the market. We're seeing modest recovery. We're seeing stalled restart. We're seeing accelerated recovery. Should we start with this modest recovery curve and tell us what's going on and why?
Yeah, Andrew, I think, and the one we've left to one side, because I think we probably had enough of it, is the hibernation state. And certainly from our framework for analysis, we've identified 5 constraints and 4 different states of airlines. Indeed, you can even almost extend that to 6 constraints. But what we've got in this chart here really is the number of people being processed by the TSA in America, the Homeland Security Agency. And what it shows is that we had the recovery in sort of mid-late April. It recovered pretty quickly then. And if we'd push that trend forward, which actually stops around about the 4th of July, then we would have been back to around about 60% of what it had been by this time compared to last year. The reality was we had a bit of a stall, and the stall was caused by more outbreaks, more restrictions being brought in at the state level, and people saying, well, we're not going to travel. If you have a constraint or a fear of quarantine, then your default position is not to travel. So if we then look at the trend really that's set up from, you know, around the first week of July and push that forward, then we're about where we thought we might be. It's between 35 and 40% of the last year's throughput compared to where 2019 and where we are now. What we've seen of late, it's moved up a little bit and a little sort of slightly steeper curve, but this is not just domestic. And as we'll show a little later on, we've seen cross-border travel, not to Canada, not to the Pacific, not across the Atlantic, but to Mexico and Latin America. And here, this is just sort of like a steady rising trend. We're seeing it in other markets as well. But again, if we look at airlines, and we sometimes have to fragment them into the bit that's growing or recovering or restarting, recovering, and then perhaps growing in due course, to those which are hibernated. And the ones that are broadly hibernated is where there are restrictions, and particularly in international markets.
So we can see this curve started, it was coming up quite nicely. What do we think happened around the 7th of July? What flattened that curve out?
Well, what we saw an increase in outbreaks and an increase in restrictions at state level, which prevented people traveling. And again, we've got the data which airlines have put out where we can look at forward bookings and how forward bookings changed. And you can't correlate it, or you can correlate it, but and there may even be some causality. But when we saw rates of infection go up, we saw forward bookings fall away. And, you know, that's the same for everybody. Forward booking horizon is very short. And instead of it being normally about 6 weeks, it's probably about 6 days now, which makes it very difficult for airlines to plan where they're going to deploy capacity. And even more than that, it makes it extremely challenging for them to get any cash in up front.
Let's move through then to Europe, where we're seeing this stalled restart, and these curves are looking very different. Tell us what's going on in Europe.
Okay, well, we've got 3 curves here. We've got the business aviation, which is the bottom one, mainly because this is in terms of volume. But if we look at it, it recovered and then it sort of carried on. And what we saw in the summer was, in some weeks and some months, the amount of traffic measured by the number of flights greater than what it was in 2019. It's tailed off a little bit, and we're trending at about 86% of what it was compared to this week last year. And what we've seen obviously some businesses use it, but the explanation seems to be that a lot of high net worth individuals have been using business travel more than might normally be the case. And that's what's driven it. What we've also got is traditional scheduled, and also what we've got is LCCs, low-cost carriers. What we saw in Europe was we saw a release and an expectation of improvement as we went through June into July. And then the brakes came on again in the latter part of August, where infections began to pick up, quarantine was put in, and it fell away again. And we've got no momentum going through into the winter because leisure traffic is broadly very low then, and that's much lower than it would have been normally. But we've seen no follow through in terms of business traffic. And indeed, our own survey suggests that if once things get going again, once people could move more freely than they can now, then in the first 12 months after we see travel restarting, what we're going to get is probably a volume of business traffic about 30% of what it was in the 12 months before COVID. For the traditional scheduled carriers, and again, this is European flights, what we've seen, this is mainly short haul. Very few long haul flights. And to put it into context, British Airways, which used to fly 8 times a day from Heathrow to New York, is flying twice a day there now. To a number of destinations, it's not flying at all. And what we've seen in the case of British Airways, it moved its short haul operation up from Gatwick to centre it on Heathrow. So it's been flying to lots of leisure destinations. And yes, quarantine, and indeed we've seen France locked down over the last day. We're seeing greater restrictions. So in terms of short haul travel, that's going to fall away again. But when somebody opens up a route, we see a sort of migration to it, and people rush to book because they're indifferent and they just want to get away. But I think we've got, and we've seen traffic, we've seen figures and financial figures from IAG and Air France KLM today, and that paints a pretty realistic picture is going to be.
I suppose that those curves tell us so much about the industry, don't they? I think the first thing that you take from it is that there is absolute demand to travel on aeroplanes, isn't there? You can see that as soon as those restrictions were lifted, kind of beginning of late June, early July, demand got lifted and traffic came straight back, didn't it? But then when you start to see the beginning of September, these restrictions beginning to kick back in again across Europe, it tails off almost immediately. Particularly how sensitive that low cost carrier market is to this disease.
I think that's right, Andrew. And I think if we look at it and make a more sort of general observation, the thing that most people missed when they were in lockdown is seeing their friends and relations. And all the survey data shows that. So as soon as you say you can travel, what happens? People say, I'm going to go see my friends and family. And we could see that from the traffic patterns. And apologies for this being very London-centric, but for some of the traffic patterns that were coming out of London to where it was people who worked and were stuck in the UK and wanted to go and see their friends and family outside in European countries. Leisure follows a pattern because when it's holiday period, people will go on holiday. But as you say, we haven't seen the follow through in terms of business. And it's a very interesting thing because, we might have seen the volumes come back, but we haven't seen the fare levels. And if we see visiting friends and relatives traffic, it's low yield traffic. And we see the same in leisure. So it's almost for any particular point in the recovery that we're going to see, the volume and value of traffic is going to be different from what might be a normal curve. And as you say, here we've seen periods where it looks as though there's a strong recovery, the momentum has faded, and then it's moved away again. So challenging and difficult times remain.
Absolutely. And let's move on to the third curve that we're looking at. And to be honest, before we were planning for this podcast, I didn't actually know that this curve existed. So we have this accelerated recovery curve where you can see that the pattern is shooting straight back up again. Okay, we're nowhere near our 2019 levels, but the strong growth here. Where is this and what's going on?
Well, the curve that we have is taken from Airlines for America, their daily series of the COVID updates, and they break down the traffic. And here we're looking at Mexico and we're looking at Latin America. And some of the Mexican traffic and some of the Latin American traffic is leisure. People going to leisure destinations, and there's a suggestion that Cancun has been pretty well has come back quite strongly. But again, it's visiting friends and relatives. It's seeing your friends and your family in nearby countries. And again, if we look at other curves, we can look at domestic Russia, we can look at domestic Malaysia, we can look at a whole host of these where you are able to fly within country, and that traffic's come back. And again, if we look at Australia, which should be a huge domestic market, it is a huge domestic market, but the intrastate restrictions on traveling between states have held that back. They have obviously begun to be lifted, with Victoria sort of appearing to come out of quarantine and be able to begin to move freely there. So we will see more growth in those markets. But it's almost a sort of simple thing, and I'm probably boring it, keep saying it. Generalizations are hugely dangerous. And what I'm interested in, and what everybody should be interested in, is what is going on, not just at a market level. So we have a country, we have a market, and we have markets across countries, and then at an airline level, and each is different. And it's the structure of traffic. So in Asia, if we look at Hong Kong, or we look at Cathay, and we look at Singapore, passenger traffic is almost flatlining. So that's very much in hibernation, but freight is back. At Hong Kong Airport, freight was only 3% down on what it was 12 months ago in September. If you look at Incheon, where again passenger traffic is flatlining, you can see that cargo traffic is above what it was before. Indian domestic is coming back, and domestic cargo in India is coming back strongly, as is international cargo. So again, it's the point of looking at it very specifically, looking at the detail, and that's something we do all the time. And we've got an awful lot of analysis, which is we haven't got time, probably a day, to show all the charts that we have. So with this, but it makes the point that if you have a reason to travel and you're able to travel, the confidence is there. And just one last point: people are talking about the existential threat to the airline industry. Well, there isn't one, and you've summed it up there. The demand is there. The structure of supply will be different, and for some airlines it's going to be very difficult, and I'm afraid some other airlines will fail. We will see new models being brought in, and different ways of approaching that demand. The demand is there. We will see a bounce back, and once we get the markets opened, once passenger confidence comes back, we will see it driven by economic activity again. And there's a wide range of economic activity and economic activity forecast, which we'll come to a little later on in the presentation.
Well, let's get into these market constraints. So we can see on the screen here that we've picked up a range of issues, and there are lots and lots of reasons why the market are constraining. So we've talked about route reductions, we've talked about airlines physically not being there anymore. The three that we're really going to look at is this: travel restrictions, quarantine and testing, and economic shocks. Let's start with travel restrictions. It might sound like an obvious statement, but why does a travel restriction curtail a market? Why does it constrain growth?
In simple terms, the market is closed or broadly closed. And we've seen where there've been repatriation flights of families going back, and able to go into their own country. But the restriction, some of these restrictions are very, very onerous, and to all intents and purposes, the market shut. So the normal traveller can't go there, and that's the constraint. And we've got the map that IATA puts out, which is a very useful website. I wouldn't begin to start and suggest what they are, but anybody who's interested, just click on the link. It shows you what they are and explains what they are. Going between countries and going within countries. And, we are, for good reason, the health authorities have decided that this is the barrier they need to put around to prevent importing it or prevent the transmission of the virus. And until they are happy, these are going to remain.
I suppose the other issue with these travel restrictions is it is an obvious statement that if you can't travel to a country, then there isn't, you take capacity out. But it's the snap way that some of these restrictions are put in place that's the bit that's really undermining passenger confidence, isn't it? And we talked earlier about how the winter market being incredibly tough. One of the issues for that is the fact that people actually don't know whether I'll be able to fly to wherever I want to go in December, because I don't know what the travel restriction would be. And it's not ad hoc, and we know these are very difficult decisions to take, but this lack of certainty around whether you can go somewhere means that you are less likely to book, and therefore there are less passengers wanting to fly.
Andrew, that sums it up very well. Uncertainty causes a default position, and the default position is to do nothing. And here we have sort of borders which are closed. We have, certainly in the UK, travel advice, so we can't, we're advised not to go there, and our insurance is apparently invalid if we go there. But then you've got quarantine, and what we've seen certainly is when countries have moved in and out of accepted corridors or quarantine, that's a real problem, because and we saw it this week. And again, apologies for a UK context, but it's the news that we get most of all. And yesterday, it was decided that Cyprus was going to come off the travel list, and was if you were in Cyprus, you had to be back by 4 o'clock on the morning 2 days later Otherwise, you're going to have to go into quarantine for 14 days. So what does that do? It means nobody's going to go to Cyprus afterwards, so big cancellations. It also means that everybody's going to try and rush home where there may not be capacity, and some people again and probably have to go into quarantine as a result.
You can see up on the screen that you asked some survey questions around what's the impact of quarantine and how does this issue of pre-departure testing work. Talk us through what the results were.
Okay, we've got two results, and the ones are if I have to go into quarantine on arrival, am I going to go there at my destination? And the answer is no. So I think it was 96% of people said that they weren't going to go. If we look at it from people returning home, and I have been away and I come back, if I'm happy to travel, if I have to go into quarantine for a period of time, then a much greater percentage of people said yes, they were happy to travel. And again, you can split it by leisure people happy to come and go into quarantine, and indeed perhaps the way in which we now work more from home, more with Zoom meetings or whatever, people are prepared to sort of go away and do that. Doesn't work for business because if your business trips range from the overnight stay or the day trip to an average stay, I think in the UK is between 3 and 5 days, then if you have to go into quarantine for 7 to 14 days, it just renders it as an impossible way to do business. So it's pretty clear that quarantine has to diminish. There are good reasons for it. People have made good judgments on why there has to be quarantine. But can we get around it by testing people before they got on an aeroplane to show that they are COVID safe, COVID free? And you can do it in a multi-layered way. It's not just one test, but 2 tests if you like. You protect everybody on board the airplane, and passengers have confidence that those who they're flying with have been tested and are shown to be free of the virus. Now, the challenge with that is to have unilateral acceptance of a test in one country as a departure test being accepted that the person arrives at their destination.
Just what you can see here up on the screen again that
really
you did the interviews and took the research on where this testing should take place, and the overwhelming response was that it needs to be done before departure. And again, it just seems to make sense again that I never really understood why you would test people on arrival, because by default, if they have COVID on arrival, that means they've infected or potentially infected everybody coming through the airport and then on the plane itself. It never really seemed to make sense. I suppose the issue now with testing is everyone thinks it's a good idea, but the cost of it it's somewhere between 100 and 100 and 200 pounds. That the figures they're being banning about. That's still quite a lot of money, and it could be a big disincentive for the traditional family for going away on their winter break to add another kind of up to 800 pounds on their ticket. That's quite a lot of money. How do we deal with that? How do we solve that issue?
Well, I think that's right. You're absolutely right with the 2 issues there. And it originally started that arrival testing would be the thing. We have been pretty clear that departure testing is the way forward for all the reasons that you've suggested. We believe the need is for something that is accurate, something that's rapid, and something that's cheap. And again, we've surveyed people about how much they're prepared to pay, and it's somewhere between 10 and 20 pounds. As we look at all the development of tests, and they've got to be a test which is rapid. It can't necessarily be a saliva test, and we've already seen it that tests are now quicker, they are now cheaper, and they can be undertaken rapidly at airports. And you can keep people away from the airports. We test them, they go into the airport, they are then COVID free or shown to be COVID free going into the airport, and it's a whole, if you like, clean green zone, COVID free zone, and all that adds to the confidence. But you're right, it cannot be £150, £200 a person for exactly the reasons you pointed out. That it's probably a lot more than people have paid for their air travel, let alone anything else to go and add to an additional cost. And that won't act to free up traffic. It has to be cheap. And in some places we're seeing airports pay it. We're seeing governments pay it, just because they recognise the importance of tourism. The other thing it has to be, the testing resource mustn't be a drain on the national or local health authorities. It mustn't take testing capacity away. So it has to be a standalone solution.
Possibly the biggest constraining factor that we're going to look at now is the economic shock. And it may well be that because of what's happening to the global economy, that family of 4, the last thing on their mind right now is taking that winter break. Obviously, an economic shock is going to have a huge impact on aviation, but let's go a little bit deeper than that. Tell us what's going on and quite how it's going to affect aviation travel.
Well, Andrew, I think we've got obviously the OECD figures for the world, which is a sort of massive aggregate and the envelope of everything that's going on underneath it. And there's a huge range of variation. If we look in Asia, and we'll come to this again in a minute, it bounces back more quickly. But the reality is two things. Economic activity will take over as the key driver. And by economic activity, we can simplify that to household income, business income, business profits, cash going into business, performance in businesses, which will determine leisure traffic, and they will determine business traffic. And what we will see for any given point of economic activity, so it's fallen down, it's going to bounce back. For any given point on the bounce back curve, we expect the amount of travel and the value of that travel to be less than it was when actually we were in the corresponding point pre-COVID-19. And that's because the structure of traffic has changed. As you mentioned, what we will also see is some families who cannot afford to go away, even with, even the level that fares have been. And they will hold back, they will try and get away. It may be a shorter holiday, maybe to a different destination. But we mustn't sort of underestimate the impact and the breadth of this shock on income, and people might want to stand back a little bit before they start traveling again.
The business travel is where the airlines get paid effectively, isn't it? And you could see a situation where families will continue to work hard and will go, I want to go and see friends and family. I need, I've been cooped up for best part of a year. That's a priority for me to go and see a different part of the world. You can understand that. But what is going to be, I think, more difficult is when putting in your request to the FD to say, can I have a business class or 2 business class tickets to fly to wherever for a meeting? That is going to be a much more difficult sell now, because the first question any FD is going to ask is, why can you not do this meeting on Zoom?
I think it's right. And again, we've asked questions about business travelers and when they expect business travel to come back and what they expect the frequency to be before. And I know from when I worked in the city that anytime there was a sort of an event, exactly the hurdle you had to sort of get over to justify travel was higher, and you traveled in a different part of the aeroplane. But what our survey showed, as I mentioned before, we expect business traffic, when you can start to travel again, to probably be about 30% of the volume it was in the 12 months before the outbreak of COVID-19. And it's not just short haul, it's particularly long haul. What I also think we're going to see is, we asked about the Zoom meetings and video conferencing and how it's going to take over. It's going to take some meetings away, but I don't think there's a substitute for relationship building. You can only do that face to face. But again, it's going to be a lag before it comes back. And indeed, we asked the question of travelers of whether it was the financial constraints their business would be in, whether it was the fear of getting COVID, or whether it's a position that their potential clients or actual clients were in that would prevent them from traveling. And actually, the majority said it was actually the position they thought their clients were in. So yes, they would want to continue the relationship, but it would be very difficult to justify going to see them if there was not any business likely to be forthcoming. So again, that's all an economic impact, which has yet to work its way through the system. But again, it's going to differ market by market, country by country, because we'll be in a different point of the recovery curve.
Because we had this, we all went into lockdown in March, didn't we? And we started to use Zoom and Teams and whatever it was, and everyone thought, oh, I never need to travel again. And I think what we've all learned by now in October, the end of October 2020, is that actually we're such sociable beings, and that when you're doing if you're doing a technical meeting with somebody or a catch or something like that, Zoom is absolutely fine. But if you're trying to build a relationship, if you're meeting even internally, because it's all okay to do these things over Zoom when you know the other person you're talking to, but cycle through another 6 months and you get churn within the organization. You don't know who that person is. We are social beings, and therefore we will still need to travel. There still will be a requirement. But two things, either you're not going, or you're going, but you're sitting at the back of the plane. It's a really interesting thing to think about.
And again, that reduces the revenue for the airlines and the yield. So it's, you may get the volumes back, but the different structure of traffic. And I think the interesting one, I haven't looked at the data for a while, the Harris organization would ask, what did you miss? And obviously friends and family we talked about before. They also asked if you missed going to the gym, and they asked if you missed flying on an airplane. And at one stage early on, more people missed going to the gym than flying on an airplane. Now, I haven't checked the data recently, but it would be interesting to see if we are having those sort of withdrawal feelings about flying. And it may well be the case.
Well, I suppose we've already started to talk about what the future will hold, but let's really get into this. So we've looked at where we are, these curves, and how different markets are responding in different ways. We've seen about what those constraints are and how those constraints might be solved, and particularly around quarantine, particularly around pre-departure testing. What do we think 2021 is going to look like for aviation?
Well, Andrew, you've sort of set me up for the classic economist answer that on the one hand, it's going to be like this, and on the other hand, I probably haven't got enough hands to explain it. And what we have here is some sort of broad aggregates from the IMF data. And, even looking at the second one up, which is the European Union, we have a recovery bounce and then the curve flattens again. And again, it depends on the shape, structure and openness of your economy. And again, going back to something I mentioned earlier, you look at the trade flows at the moment and you look at the strong trade flows in Asia. And in some of these markets, you can look at the direction of flow. And yes, there's not a lot of inbound cargo coming from Europe, but still outbound cargo going from Asia. But again, there are good reason to expect the ASEAN region and APAC to recover most quickly. Again, if we can go into detail, although we don't have it here, into the individual sort of forecast by country and whether they're from the IMF or whether they're from the Asian Development Bank, they're pretty consistent. Some markets have clearly been hit, and we know those. India, Singapore has been hit, and there will be a bounce back in 2021, but it might not recover to what it was in 2019 by the end of the year. But you look at the dynamism in the Asian economies, and that will drive it. In Europe, much slower recovery. And again, we can break out within Europe which are the slowest. And, on the latest IMF figures, the countries taking the longest to get back to where they are Italy and the UK, and for a range of reasons. But again, it highlights why we need to look at it at a market level, at a local level. And at the end of the day, a very simple way of, if I'm going to operate a route, what's the economic activity at both ends of the route? Where's the traffic going to flow and everything that goes with it? But I think we are looking at, and by definition, we're going to get the bounce back. The rate of that bounce back will differ. And then we're going to be looking at differentiated rates of economic growth. And it is the economic activity that will drive it. What we also see, if we look at a relationship between money value GDP and air travel, then that massively contracts in a downturn, which by definition we've seen, and then it takes quite a while for that previous relationship to recover. And we had our last peak in 2016. The market was already weakening in terms of profit in 17, 18, or 18 and 19. We've got a resetting of the economics. But once we've got markets open, once we've got restrictions lifted, and once we have confidence back, then it's driven by economic activity. So that's the thing I look at most closely.
Linked to this economic activity and the changing nature of the passenger and where they were going to fly, you came up, you were talking about it's the end of have metal will fly. Talk about what that is and how that's actually in 2021, 2022, we actually might see a different type of configuration of fleet and the way that we fly to places might be different.
Okay, like many other people, we've looked at how many airplanes are in storage, the type of storage. We've taken a view on which ones might come out, which might be converted, which might be cut up. And yes, the general view is that sort of rather aged wide bodies are not coming back, but we're also seeing 10-year-old narrow body airplanes being parted out, to use the terminology in the industry. They're being flown to the scrapyard and broken up because there is no market for them. We still have, in my opinion, a dislocated market here. But the have metal will fly sort of strategies are a shorthand way of saying, well, I've got too much capacity. I'm going to put it in the market. I'm going to fly. I'm going to cover my variable costs and make some contribution to my fixed costs, overhead and my profit. But that hasn't been the case for some routes for some time across the world. And so we're going to see a resetting of that. If we look at the restart approach for the airlines, you've got 100% of the cost once you start operating an airplane. So you're only going to operate that on routes where you've got a pretty good chance of making money. And I think we're going to see networks sort of almost truncate, almost focus on a core where there is a good chance of sustainable profitability from that. So airlines are not necessarily going to fly to everybody everywhere they flew before. And even to where they fly, they're not going to fly the same frequency. And again, if we look at what it means, I might be, and also we're seeing fleet change. So we're seeing larger airplanes being taken out of the market. Yeah, by definition, and we've seen it, 350s, 787s, very long range, very efficient, tend to be smaller airplanes. So we're going to have almost by default an acceleration of more efficient airplanes coming in, which has a bonus for emissions and everything else that goes with it. But it means there's less seats to fill, which there should be a revenue benefit in terms of the airline. So you're not having to fill a lot of seats at low fares, and where you may be losing money on some of these. But so smaller airplanes for the long haul sector, which for some airlines, which transfer traffic, not some of those perhaps whose the core business is demand aggregation or hub and spoke business, we're going to see less need for transfer traffic, less ability to accommodate that transfer traffic, and so not only does it mean smaller aircraft on the long haul sector, but it may has implications for frequency, size of airplanes on those feeder routes as well. So we're still working through that. We're looking at data and looking at where transfer flows are, how much transfer traffic there is, and what happens if you say, take 50 seats off, one airplane doing the long haul sector. So that's still very much work in progress to say. But, what we're seeing, and we've already seen it, airplanes, statements of intent, we're going to retire these airplanes. They're going to be older wide bodies, so they're not coming in. Again, so we're having a change in the fleet. And again, it's going to manifest itself in the near term of fewer destinations, fewer frequencies.
So I've got a couple of questions there, and these could be podcasts in themselves. So let's just touch on them briefly. First question is, so is this the end of the A380? And then the second question is, so does that mean that the hub airport or the bigger airport, even if it's not a hub, but if it's a point to point, but it's a big airport, am I going to see those get bigger because they can operate at scale? Or am I actually going to see more smaller domestic airports that can operate more cheaply and are slightly closer to the passenger? How's that all going to play out?
Again, Andrew, it depends. Now, answering your question as a passenger for the 380, and having followed Airbus, goodness, since I suppose the mid-late 1980s, a fantastic machine for a passenger, very comfortable ride, and okay. That's part of the way in which the airlines fit it out. And if I'm an aircraft salesman, I'm selling you floor space and you can do what you want with it. And it has a particular age, particular capacity. But what I think we've seen, and we've seen it through the actions of Lufthansa, from the actions of Air France, and from the actions or the comments from British Airways, that yes, these airplanes are in storage. Qantas's A380s, all its long haul fleet is in storage until July 2021. I don't know when they're going to come back. We have obviously Emirates, where that's a core aeroplane for its future, but to a greater or lesser extent, it still seems to be operating 777s for its network, driven by freight. But I think, it's going to be a challenge. It was an aeroplane where it was just at the cusp of a new technological development with the long range, efficient, effective twin, so the 787 and the 350, and that's the way of the future. It's got the range, it's got fewer seats, it's got better operating costs and everything else that goes with it. So I think it's a marvelous machine. It's always very sad when an airplane may reach the end of its road, but let's just see what happens. It could be repurposed for things, and that's again, obviously minds are looking at that and seeing what can be done with it. In terms of airports, again, it sort of depends. If we look at Heathrow's latest forecast for its traffic, then it's forecasting for this year something like 22 million for the full year outcome compared to 80 million. And for next year, it's just over 37 million passengers compared to 80 million in 2019. And it's not expecting a rapid recovery. And again, if we look at the likely structure of that traffic, it's mainly going to be short haul. For the demand aggregators, and whether in the Middle East or in Europe, yes, there are whole issues, because you have an integrity of a network which is driven by being able to offer connections, offer a schedule, and offer a network. And if you start taking out some of these destinations, then the connectivity index changes. And if you start taking some of the frequencies out, then your dwell time for connecting takes longer. It's still not to be determined. And obviously, there are airlines which are mainly demand aggregators. There are others which demand where hub and spoke traffic, transfer traffic is has been an important element of its traffic against the background of the fleet it has. We're seeing fleets at some of these airlines change, and with it the traffic. So with airports, if we look at a very parochial way, maybe those airports in the short term, which have visiting friends and relatives traffic, or a large component of that, plus leisure traffic, are those which will recover more quickly. But again, work in progress, analysing everything from a market at an airport and an airline level?
There's so many questions that you could have a series of podcasts just on this issue alone. But I suppose the final point that we come to now, and this is possibly the thing that most surprised me when we were planning for this, is that in 2021 we might start to see new market entrants. Why on earth would we see new people come into this industry when there's so much turbulence going on and it's so uncertain?
It's usually because you can start with a blank sheet of paper, move into a dislocated market. And as your graphic shows, you've got three things there. You've got an abundance of aeroplanes, which are very attractive in terms of cost. And one of the key, if we look at an airline, it has a asset management or a capacity management model, and you have to get that right. It's like any business. That has to be the key. And we saw it after 9/11, and we saw it in after the great financial crisis, that were great opportunities for those on the right side of the trade to acquire airplanes. We saw EasyJet and Ryanair after 9/11. We saw Wizz and the Gulf carriers at the time of the great financial crisis. We know there's a lot of capacity about. We've got a view on what it's going to cost. And indeed, I'm working on sort of three different opportunities in different parts of the world and different segments of the market. There's no shortage of very skilled staff who are looking at a very difficult future. And again, you can bring staff in to operate your business. Is the time right now at this immediate point in time to launch it? Maybe not, but the time now is to sort of work through it all and begin to have sort of conversations to develop the business. And if you've got a dislocated market, what you also see, and again, we saw it after 9/11, we saw it at the great financial crisis, where the incumbent airlines are troubled, their managements tend to be sorting out their own business. And you can come in perhaps a little bit under the radar and sort of get a foothold in a market. You're not going to compete across the whole breadth of their business, so it's all very targeted. It's as I say, mainly dislocated markets. You come with a very, very low cost against the background in which the way the traffic is changing. You have, I think, a pretty good opportunity to service the market. Traffic's not homogeneous, so you look at where the opportunity is, and you look at the opportunity that there is now to serve that in a better way, and we think that's where the opportunity will lie, lie.
It seems to make perfect sense, doesn't it? As soon as you start to get into that you've got cheap assets across the market, the people you can get them, the fuel's low, and routes that previously therefore were not economic and could never work now suddenly come back into play. But also, just as you pointed out there, that these bigger companies, these bigger airlines, they are focusing on their core traffic and their core routes. So they might have a peripheral route that
you don't have to take all of the market. You're absolutely right, Andrew. You don't have to take all of the market, and it's targeted, and we've seen it. And yes, if you start with a blank sheet of paper, you haven't got all the issues about turning the business around.
Chris, it's been an amazing conversation. We could go on for forever just on any one of these sections that we've looked at, but let's pull together some of our conclusions and help me along here. So, unfortunately, we don't know where the bottom of the market is, but we do know that bottom is different for different geographies and for different sectors. So there are certain places where we may have already seen the bottom and we're right back up, and private aviation or business aviation springs immediately to mind. I think we've talked about quite a lot here about the role that government has to play, about the consistency of policy, and that's around travel bans and quarantine and pre-departure testing, and the role that government will play within the economic recovery. Because what we can see from the curves in our first section is that there's absolute demand to travel. What we need to be able to do is do that safely and securely and have a consistent policy. And if we can get that, we've seen that already unlocks passengers and it gets people back up into the air. I think going forward into 2021, I think make no mistake, 2021 is going to be and potentially in certain sectors, more turbulent than 2020 has been. We are going to see airline failures. We are going to see more people being redundant and the implications that has on them for their family and their well-being. And most of this is going to be led by the global recovery. So until we get that right, aviation will follow that. We're going to see fleets being resized, and we're going to see these bigger, older aeroplanes being mothballed and put out to pasture, for want of a better word, as airlines try and reconfigure their fleet to meet their demands and their needs. But there's this shot of good news, isn't there? That you've said yourself you're working on 3 new opportunities for airlines. We may start to see companies come back into the market and start to service routes that weren't there before. I suppose all we can really say is that 2021 is going to be an interesting, if that's the right word, year for aviation.
Andrew, I think you're absolutely right in your summary. I've got really nothing to add. But you're right, and perhaps we should consider another sort of webinar in the not too distant future to drill down a little bit into some of these issues that have arisen, and indeed any feedback that comes from this session.
Chris, it's been wonderful, and thank you for coming back. We will definitely have you on again. If people want to get hold of you, they want to discuss this some more with you, what's the best way of doing that?
Two things. If my email's on the back of the presentation, which I'm happy for you to put it, Andrew, please contact me by email, or I'm pretty sort of visible via LinkedIn or Google. So always happy to discuss and chat, and look forward to chatting to you again very soon. And anybody who thinks what I've said is maybe of either of interest or contention.
Thanks, Chris, and we will see you next time.
Thanks very much indeed.